When people say you can't beat the market, the thing is you cannot beat the market if you're part of the market. Um, it doesn't. It used to be a long time ago where Japan and everybody was individual. Maybe Argentina's a little bit different, but they all follow. This is the index of Japan index. Look at it. It's the same. It goes down. Then this morning, when Donald Trump announced that there will be a war still, it went down, up, and then down. And look at um, the S&P 500. Same thing. It was crazy today. It just went right up. So it follows everything. So when the stocks, 70% of the stocks, if they're going up, they're going up in the S&P 500. If they're going down, they're going down too. So if you're part of the market and using those companies, you're not diversified at all because they also go down with the market. The only way you could beat the market is taking something different. Let's say, I don't know, like oil. So if oil or even natural gas, it goes up and down, a little bit risky. But let's say oil. There's a Canadian one, HOU. Look at this one. And did the opposite of today, of the market. 15%. The oil went up. And March 2nd, it was $12. Then it hit 25, went down 14, 28. This is how you beat the market. You're part of a different thing. It's not part of the S&P 500 companies, which most of them are really good companies, but you cannot beat the market if you're part of the market. So if you're in the market, it goes down with it. If you're up and the market is up and you're in it, you're riding it up or down. So this is why you cannot beat the market. So if you're going in and out on those stocks in the S&P 500, you cannot beat the market unless you wait and get it at the right time, but it's impossible. So the way to beat the market is actually being diversified, but not part of the S&P 500, because most of those, they'll go up and down the same way. So you cannot beat the market. It's impossible. But things like this, the oil goes reverse, or natural gas. Where's natural gas? Natural gas, if it's cold, HNU, that's natural gas. Yes. So look at this. This is 15-minute. So things like this, if you're not part of that market, you can beat the market, but or even gold. Gold and the gold actually goes with the market up and down, but the swings on gold or gold not so much, but let's say AGQ, that was silver, that was $38. It went up to 400. That's triple, a little bit, or is it triple or double? Let me see here. It's 2 times. The thing is, when the silver does go down, it goes really down and then bounces back. But when it bounces back like 50, 60% at least. So 120 to 190, and it keeps on bouncing. Korea is doing the same thing. Let me see here. Where's Korea? This is Korean. What did it do today? It probably did the same thing as the United States. Yes, it did. Look at this. It went down and up. S&P 500, where is it? Right there. Same thing. Went down and up. This is overnight here. So on the Korean side, I don't think you see that. Or do you? Let me see here, because it says index. Korean. No, you don't. So it's the whole night is missing here. But it did the same exact thing. So if you're part of Korean market, let's see Japan. Japan had overnight. It does the same thing. Look at this. Exact copy of the S&P 500. There is no difference. Being diversified in different things like that, they're not really diversified. If you look at the S&P 500, there you go. Is it the same? It's exactly the same. There's no difference. So being part of the index, S&P 500 or Korean or Japan, same thing. To beat the market, you have to choose individual different sectors of the market, and that's diversification, because you cannot beat the market. It is impossible to beat the market if you're part of the market, because the market goes up and down and you're just riding the wave. And so if you're up with the market. If you're down with the market. So if you're trying to beat the market, you can't, because all these companies will go down together. There's only a few that don't. If it goes up, if the market is really strong, every single one of them, almost 80-90% of them will go up that day. Um, so you to really diversify, you have to get something way different. Like in this case, will be oil companies, or some kind of oil index. Uh, okay, let me see here. The changes are added some. Uh, oil, OILU, 24%, HOU, 15%, SO, USO, oil, Tesla, this one goes up and down. That's another one. Um, it goes, I think, double or whatever. So this is another one that doesn't really follow the market. It's part of the market, but it doesn't really follow everything. It does its own thing. Silver, that one's went up because the silver went down. So this one, when the silver went down, went from 14 to 28, 15 to 28. So 100% and 100%. So it did a big bounce. But these are risky, because if the silver was going up and up, it always cuts the price in almost in half. UCO, that's another one. That's oil. Let's see the oil price here. It's 112. So things like that, or energy. Look at this. In January, it was $17. Now it's 52. This is how you beat the market. Um, it's not being part of the market. If the market is going up, it's fine. Everybody's a guru. But if there's tough situations like now, you can make huge amounts of money by because of the swings. But choosing a company in the S&P 500, when the S&P 500 is going down, it's really impossible to make any money. So that's why they say stay in the market, because you can't beat the market. You just ride it up and down. The thing is, if you ride it up and down, if you got a little bit of money, you're not making anything. It's going to take you 150 years to make any significant money. That 8% or 6% that they're talking about, if you got a little bit money, that doesn't amount to anything at all. So to really beat the market, some of the day traders, probably 95% of them are it's too emotional. It's ups and downs, and people can't take that. So you really need a special person to be a day trader. But I think the best is when the market is down, and you have money lying around, like Warren Buffett. He's waiting. He has $300 billion. Then you go in. But if you don't have a lot of money, you see the opportunity, and you can't do anything. It's just gone, because you can't invest. So that's why the poor get poorer and the rich getting richer, because they wait for those opportunities and they go in. Even um, Charlie Munger, he said, there's only several opportunities in your lifetime, and if you don't go all in, like when the oil was down, you don't go in. That's once in a lifetime opportunity. Again, a little bit later on, now the oil was a big opportunity, but not as big as 2020. Um, uh, Warren Buffett and Charles Munger said, if you don't make 2 or 3 decisions, good decisions a year, then um, their stocks will be probably zero. They wouldn't be worth much. In the last 50 years, Warren Buffett made maybe 20 good decisions. Every couple of years, he makes a good decision. So this is why only a few decisions, and not very diversified. When you look at his portfolio, There's only maybe 5 companies that are maybe 60 or 70 or 80% of his portfolio. So by being diversified, you will never make any money. You have to go with things like oil right now. So go into one, and that's how you make money. If you're diversified, the oil goes up, and all the other ones will go down. So net zero, so nothing. So you have to research, but don't research, don't overkill it, and don't go over YouTube and research something like gold is going to go to 10,000 or 20 or 50,000. If you did that the last 10 years, you'd lose a lot of money. Gold didn't go up very much. It's only the last couple of years that went up. All the other stocks, tech stocks and everything, killed it. Look at Western Digital, it went tenfold, and other ones, Google, Amazon, all these ones went up, but gold didn't do very well. The only maybe two, not even two, the last year, and silver, the last only year that went up. Silver was kind of going down and down for the last 10 years. So you have to diversify in a different way, but don't choose a lot of different things, because if you choose everything, you're not making any money. You have to choose the right ones. So that's it. And the stock market, yeah, it could be brutal. Sometimes, like today, let me see here. It made no sense at all. I think it's it might be a reversal. Let's see. Let's see. It's S&P 500. Let's see here. By symbol. That was crazy. It just went up from nowhere. I said, Thursday and Friday for the last month, they went down. So when it went down, I go, what's going to happen? And that's what happened. It just went crazy up. Within half an hour, I was here. In a couple minutes, it was way up there. So if you had stuff that's inverse, let's say we had lap down. Look at this. It doesn't make any even sense. It just went up and then down. But if you look at the bigger picture, let's see, 15 minutes. Look at it. It goes up, down, up, down, up, down, up, down, very beautifully. And then it goes right there, down, and you think it's going to go up. It completely reversed and tricked people. It doesn't even look right on this chart here at all. Another one was very aggressive one. Let me see. That one. Look at this. Like, it never happened. I was watching it for months. It never ever happened like this, where it's instantaneously reversed. It went up and then it just down. It doesn't even look right. It's like stuck in the middle here. Like, there is no. That's what happened with the stock market today. It's crazy. It tricked a lot of people. Let me see here. UVIX. Where's UVIX? Same with this one. Look at that. Same scenario. You see it going up, down, up, down, up, down, up, down, and then you think it's going to go up. Completely tricked people, and it's like an arrow right stuck in the middle of this graph here. It doesn't even fit at all. There is no rhyme or reason, nothing. So today, a lot of people got faked out. I don't see that too often. Even if you look at the graph, it kind of goes up and down a little bit, maybe very severe, but it doesn't just go up and down like in the middle of this graph. It doesn't even fit with a lot of the stocks today. That's what happened. It went up and then just killed it. And it's Thursday. You would think that people will be selling before the long weekend, because for the last month, because of the stock market was going down, it usually Thursday, Friday got killed. Monday a little bit in the morning, and then bounced back Monday, Tuesday, Wednesday, and again Thursday, Friday just got killed. If you look at the S&P 500, let's go daily or maybe 4 hours. As you could see, it's like 2-3 days down and then up, 2-3 days down and then 2-3 days up, but every time lower. But here, I was thinking that it's going to go down and bounce back, and about right there it's going to go down. But look at this, it went up, down, and I was thinking it's going to go even lower, looking at this graph here, MACD, but unexpectedly it just crazily reversed. And when you look at that, if you go straight down, these two tops are already higher. So it might be a market reversal. So it'll be interesting Monday. People think that the market might crash because they sell it over the weekend, but something big happened today, because it's not only here, it's Japan, it's United States, Korea. Every single markets did this, every single one of them. And if you look at it, it's just crazy. It took maybe half an hour to get here, and then 2 or 3 minutes to get way up here. And those are billions and billions of dollars. And if you go right across, it's probably $500 billion or something. This step here, because that's crazy. And let's zoom out a little bit more. From here to here, that's a huge jump too, like 5% in 2 days. That's really crazy. It's very jumpy. So right now, the market, I don't know. It might reverse. There's two bottoms here. Let's zoom out to daily. Not too far. 4-hour chart. As you can see, this one's getting higher. So it might reverse. People say 40% on the YouTube, but 4 hours. There's 1 day. 1 day. What is 1 day telling us? MACD just crossed. Never know. Might be reversal. But if you follow the pattern the last month, you made huge amounts of money. If you didn't, you lost money. But today it was so tricky because it went 1, 2, 3. It started going down again like it did before. So it went up a couple of days and a couple of days down. It went up a couple of days and a couple of days down. But right now it looks like the tops are higher. So right here, usually they touch the red line here, which is the more aggressive line. I think it's 9 days. This was 21. So when you look at it, the tops just go right above it and right above here, and it should go down again. But look, these tops are above and touching already the green line. So it might be a reversal. So market is one of the toughest jobs if you're day trading. I don't think it's for everybody. It's too emotional, and if you're not relaxed and take it easy and very patient, then you won't do good. I think 90% of the people, they try it, including me, and you're doing good and good and good, and then all of a sudden you start doing bad, and you go, I don't know, and then you drop it for a couple of years, and then you come back again. But you need a special person for that. Most of the time, the best way is to just invest and sit on it for a couple of years when the markets are down. That's the way you make money. Sitting inside the market, I don't think so. Even look at Warren Buffett. They tell you that, but if you got a little bit of money there, it makes no difference at all. What's Warren Buffett? Right there. That's the little one. That's the big one. Let's look at the old one. When you see Warren Buffett here, I've been talking for like 20 minutes already. When you see Warren Buffett here, what is, let's see here, from here, that's 24, that's June 24 to June, almost 2 years, basically 2 years. It's if you put it in that fund, and he's apparently one of the best um, stock trader, or not stock trader, investor in the world, and in 2 years you get zero returns, nothing, because he doesn't even have dividends. But if you look back, let's look back, way back. Most of the money was made here. 1979 was what? $300? $240 to about 1990. I think 2000s or 90s. About 2000s, yeah. 2000, right here. 2000? Where's 2000? 2000 here. So it's $230 to 730. His investing style is way different than what he told you. He goes, "Oh, take stocks and invest." I think he went super risky here, super risky, but also big reward because you can't go in 20 years from $240 to 73,000. After this, once he got a lot of money and big, huge money, he started to think about not losing it all. So let's say 80,000, and now what is it? 70,000 or 700,000. So that's maybe eight times in 26 years. So that's not bad, but it's not. Let's see, 78,000 divided by, let's say even 100 if you got it, or 200, 300 times 10 times 100, that's 3,000, or 30,000. Another times 2, so that's 100 times. 100 times, and now he only did 8 times. So his investing style now is much different than it was before. I don't think he's telling the truth, because I think he was very risky here. You just don't make that kind of money. It looks like he kind of kept it, and then again, but I think he chose the stocks that really did well, and a bunch of them. He didn't choose everything. He chose it very carefully, and he amounted to a lot. Let's see, from here to there, 98 to 03. For 5 years, there's no money in here. And right now, for 2 years, there was no money. COVID hit. When was COVID? He did well, actually. 250,000, 750, so 300% in 5 years. So right here, he did kind of good. But diversification, nope, you don't make money.